everyone, it is Evan here from the Trade Risk on Friday, May 10th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we got lots to talk about this week. It was a exciting week for markets. We saw ranges really expand. We saw volume pick up, volatility pick up, and all occurring at some pretty significant levels. So we got plenty to discuss here in this video. We're going to kick things off with our market technicals dashboard. Remember, you can get to this by going to thetraderisk.com/market-technicals. This gets updated every day after the market close. So if you want a quick snapshot view of what went on here in the markets, you can bookmark this URL and just visit it anytime you'd like. So looking at the recent performance here, certainly today, Friday, we saw a green close right across the boards. Market staged a pretty good reversal this week on Friday specifically. But if we look at the 5-day change numbers, you can see we're still in pretty deeply red territory, minus 2% right across the board, 3% down for the Qs. So a pretty rough week here for trading, all things considered. That brought us below the 10-period SMA across all the major indices. We lost the 50 SMA as well in the Dow Jones, and we are still above the 200 SMA across all the major indices. If we scroll down and take a look at sector performance, you can see everything here is in the red this week with a tilt to the downside. Semiconductors leading the underperformance here, 5.8% to the downside over the past 5 days, followed by technology and transports. And top three, what's actually trying to hold up here is that defensive tone. We got staples, we got utilities, and we have energy stocks. Energy did get beaten up quite a bit over the past 2 weeks, so it is more or less, it's trying to stabilize here. Might be a reason why it's holding up there as well. But those are your top three performers, relative performers. And when we look at major markets here, we see volatility really kind of running away with it here. 30% move here in the past 5 days, but that is well off of the highs. This was north of 60, almost 70% over the past 5 days, but we did get a good amount of unwind here on Friday, even despite the 5-day damage and despite this big number here, that is well off of the highs. Natural gas to follow up 2.34%, followed by TLT. And then on the downside, we have equity markets right across the board. We got China, we got emerging markets, and we have the S&P 500 all down 6, 5, and 2%. So let's jump into the charts here. Let's take a look at how this fits into some of the price structure here. We're going to kick things off with the S&P 500 weekly time frame. This is the cash market, and first thing we'll note here is just the range of this week. We had almost a 90-point range in the S&P 500. That is quite large than all of these recent previous weeks. You have to go all the way back to the beginning of the year to see ranges that large. So that's the first kind of takeaway, is that we did get that big uptick in range. If we look at volume this week, the cash market's not going to settle that volume yet. If we looked at the SPY ETF, take a look at the volume that got put in. This is the heaviest weekly volume, I think, across all of the major indices. If not number one, it's number two all year long, but I think we did get number one across all of the major indices. So we got expansion in range, we got heavy volume, the heaviest all year, and note, of course, where this is taking place. This is just after the S&P 500 finally clawed its way back to these new all-time highs that it made 2 weeks ago. Now, 2 weeks ago, we talked about the fact that, yes, we can ring the bell, we can get excited that we finally got back up to new all-time highs. We set new all-time highs, and we really left with this kind of thought process and notion of, do we get price acceptance up here? Can the market actually hang up here at these all-time high levels and show us that, yes, in fact, we do get agreement, the market is hanging up at these levels, and we might be able to, get a nice continuation pattern and continued trend to new all-time highs? Those were the things, those were the questions and sort of analysis we were looking for over the past couple of weeks. And, we got the all-time high close 2 weeks ago. We got follow-through, slight follow-through last week. And then, of course, now we see, certainly in hindsight, that we got a rejection of those prices. We saw that volume pick up, the range pick up, and volatility pickup all to the downside. That puts us on a defensive posture. That is a point at which we should take notice, at which we are breaking trend and doing it at a very important spot. Now, the one most, or the one sort of bullish takeaway I can kind of glean from this chart here on the weekly time frame is the MACD, is the momentum oscillator here. If we look at the top pane of my chart, you can see that we are just now nudging off of these high levels made in the MACD. That to me is constructive. That is overall a bullish signal when you have a market that has been rallying higher and momentum has been kind of clawing higher. It's just been making new higher highs in momentum as well. That to me is a constructive sign versus a market that is continuing to rise with diminishing momentum or flatlining momentum. So the fact that we are now kind of pulling off of these high momentum readings as well, that does give me sort of an optimistic posture here, if you will, on this weekly time frame, given enough time. I'm not saying that the pullback's over. I'm not saying we should all buy blindly right now and everything's good and nothing to worry about, but maybe this has a couple more weeks to go. Maybe this is a reset down to 2,800. Maybe we undercut it. I'm not sure what path the market is going to take, but all I know is that the fact that we are coming off of these high levels in momentum, generally speaking, very broad generalized statement, but you tend to get interested buyers. Buyers are generally interested in markets when the MACD is coming off of those high levels, when momentum is pulling off of highs and you're getting that first pullback. That tends to be a spot at which pullbacks likely or have a tendency to be bought. So of course, lots of caveats to that. You got to know your time frame strategy, all that fun stuff. But that's something to just pull onto the bullish side here, just to kind of even out and give that objective view on both sides of the coin. To the downside, though, of course, all the points we just talked about. We got a trend line break at a significant spot. Range is picking up. We got closed below the past 4 weeks lows. So that to me all indicates that we should be here probably defensive. Again, comes down to time frame, but this is certainly a spot at which you would want to take notice of the change of character in the market. Now, next thing I want to talk about is the VIX. The VIX here this week got as high as 2338. So if we just look at that move over a 5-day change, this was up 80% from lows here, from the lows of Monday, from where we opened on Monday to the highs of Thursday. The VIX rallied 80%. That was a total rush out there for protection, to hedge up portfolios, to really sort of protect on some type of bigger market event. And of course, we did come all the way down from that high point. We did drop, 30% from that level, trading more at a 16 handle here in the VIX. So back, we lost that 20 level and we're kind of coming back down to earth. So I think you got an interesting sort of reset there. Lots of kind of the short-term capitulation here where there's a tremendous kind of rush out in very short order to protect up portfolios and hedge that risk off. And now you're seeing, based on the move Friday, a little bit of unwind there. It still doesn't mean that it doesn't mean that the coast is clear here. It's not an all clear signal, but I think it does kind of give us a little reset button here that we got a little bit one-sided here on the lows, perhaps on Thursday. Again, certainly hindsight analysis, but the fact that we now dropped 30%, we got the reversal here on Friday, gives us some indication that, maybe this is going to be a washout here. Maybe this is some tradable low that we can start to use here. Maybe if you're active, you might be able to use these recent lows here and look for a rally back up into this range next week. That's certainly a possibility. Tough to say that the lows are in here, but there's certainly some indications that we had some short-term frothy levels over the course of really the past 2 days. When we look here at the daily chart, just a little bit closer, of course, we're still in this short-term downtrend. So if we just draw from, basically the lows or from the highs here on Friday of last week, and we just kind of cycle down here. You can see we're kind of rallying back into this trend line here. Can draw it a little more precise on a shorter term time frame, but interesting to see whether or not we can actually get follow through next week. I think that's what most people are going to be looking for early next week. And of course, the range here on Friday was impressive. We undercut Thursday's range. We filled the gap here back from the 29th of March, and we took out Thursday's highs and closed near the highs on heavy volume. So little bit of indication there that this is a short-term sort of tradable bottom that we could look for if you're an active trader, but still we need confirmation, we need follow through, we still need the market to sort of prove itself out here, and the risk of chop and sideways action here is also quite high. So you really need to be quite agile if you're going to be playing on the shorter term time frame. S&P 500 though, or SPY ETF, if we zoom out a little bit further, actually let's just go to the cash market, just because I have that annotated a little more cleanly. 2,800, that's still the bigger kind of support area that I would want to see bulls step in and arrive at. We didn't get there on Friday. We got close to it. Maybe we still have some more weakness to kind of get back up or get back down to 2,800 or so in the next couple of days or weeks. That to me I think would still be a fairly healthy or reasonable level to look for and look at. But if the market wants to stage the reversal here and all worry is behind us at this point, then the market can certainly rally and we don't have to get down to 2,800 at all. We would look at a breakout level of 2,940 as the resistance of which we would want to take out. You can make a good case right now if you aren't an active trader, if you don't want to get bogged down with the noise here on the shorter term time frames. If you're looking at something a little more kind of one step back, you could make a good case right now to say, I really don't want to be too involved in equity markets now until we take out these highs, until we're back above 2,940 and breaking out to new highs and trending to new highs again. That's really kind of the all clear signal, and that's certainly a reasonable approach if you're looking to take a more kind of hands off and not get involved in the shorter term levels here. So all in all, S&P 500 staged a nice little reversal here on Friday. Got the VIX that really, got a little extended there on the upside, coincided with this nice reversal that we saw Friday. Let's see if we can get some follow through. Let's see if we can start holding above 28.72, break this downtrend line, hold above a prior day's highs. These are all the things that we basically are looking for in the short term for the S&P 500. We can look at today's lows as a good level to use, which is 28.25, and then we have this bigger 2,800 more key psychological level to pay attention to if we start to see these lows get taken out. If we go to some of the other major markets here, we'll go to the IWM, which really, from a technical perspective, is still holding up best out of the other major indices here. If we look at a weekly chart, for instance, certainly we're not getting a big range expansion and break of support like we saw in the S&P 500. And to the other side of that argument, we're also not at prior all-time highs. So there's two ways you can sort of look at it. But all in all, we still have a MACD that is close to the highs there, just starting to pull off now. We did reject the breakout from last week's Friday, but we didn't in fact even close below last week's lows. So the S&P 500, for instance, took out the prior 4 weeks lows and closed below them. If we look at the IWM, we in fact closed within last week's range. So it was a high volume week. We did see volatility expansion here, but we are getting some signs of buyers stepping in, kind of this double bottom here, just under or just around this 154 area, and we did get a close above this support area, which was basically all from April. We've been closing above 155 in the IWM, so this is going to be interesting to see whether or not we can get follow through here. I still do look at this as one of the saving graces for the market here. We talked about this last couple of weeks on whether or not the IWM could get this breakout over 160 to start being kind of the leader here while the S&P 500 and the NASDAQ takes a break. And that might very well be the case, and maybe the story we see unfold next week where we see the IWM start to perform and maybe we still see some weakness or some sideways choppy action in the S&P 500 and maybe the Qs. But all in all, I think the levels here are pretty clear. This week's lows, this 155 level on a closing basis, and then we have the 160 resistance up here at new highs. That's what we're going to be watching here in the IWM. Next up is the Qs here. This looks kind of similar to the S&P 500. We got a break of this very steep kind of trend line as this has been launching higher. We lost the prior all-time highs that we just set 2 weeks ago, and we did close below the past 2 weeks lows. We did it on heavy volume here. So lots of, kind of an indecisive candle here, given the fact that we did get a strong rally off of these lows. But certainly, again, there's some technical damage here. There's some signs that we do want to be cautious, or at least be noting the potential, kind of pullback trend reversal here, and very similar to the S&P 500, we also just have the MACD just inching off of those highs on the weekly time frame. So the Qs looking forward, 178, that's the bigger level support to take a look at. That's kind of equivalent to the S&P 500, 2800. So we'll see if we get down there. We staged that nice reversal here on Friday on heavy volume. We'll see if it sticks. We'll see if it gets follow through. We'll see if we can break that short-term downtrend. So that, I think, covers all of the S&P 500, or all of the major markets. Let's get into some other major markets. We'll go to TLT next, which on the week was up 0.88%. You can see this was kind of acting as that safety haven here for TLT as equity markets kind of pull back here. You generally get a little bit of a flight into TLT at times, and this week was no exception. It is holding up. It's not back at these March highs just yet. MACD is trying to inch higher here. Lots of kind of overlap over the past 4 days for the tail end of this week, but all in all, I think bulls trying to hold up in this trend, trying to get back up to these prior highs and hold this retest level from just a couple of weeks ago. We do remain long here. TLT still have that position on from a couple of weeks ago, and looking for higher prices, looking for that retest here in the coming weeks. If we go to oil next, oil here on the week was very flat, really didn't move too much, and that I think did help out equity markets. The fact that oil wasn't also, steeply pulling back this week. It did have its pullback over the past couple of weeks, but I think if you would have seen oil down, another 4 or 5%, we would have really seen even more pressure on the S&P 500 and equity markets as a whole. We're seeing some stabilization here in USO that's encouraging, maybe some type of higher low. We'll see if the bulls can start to take out these prior 5-day highs or so next week. Still in this pullback, cross currents really kind of going on here in both directions, and waiting just to see which way this ends up tipping here for USO. Natural gas, on the other hand, did get a nice rally here. Some signs of life as it did, put in that high volume day back on the 25th of April. It pushed up. It kind of found a higher low here, and now it's trying to work itself back up to the upside. A couple of higher volume up days starting to creep in, and we're seeing some nice positive momentum divergence here on the MACD. So some things to like, some signs of life here for natural gas if you're active, if you're tactical. Longer term trend is still to the downside. Finally, if we go to metals, GLD was up slightly here on the week. Really didn't get a move over a convincing move passed over the past 3-week highs, though. It's still flirting and sitting right in this vicinity here of the prior support, of the prior breakdown from just a few weeks ago in early April. We're looking for a little more conviction here. So I was looking at this as a potential signal this week, but not seeing quite the conviction that I was looking for. It might very well continue to grind higher here. Unfortunately, it would do so without me, but I'm just watching this 121, 122 area where it broke down from, and waiting to see just if we can get a little more conviction here next week. It'll be interesting to see if that can tip that way. And silver, kind of the same thing, is being a little lackluster here. It's not back above $14, hasn't reclaimed support. So metals, gold was up, silver was down this week, 0.86%, but really waiting to see, a little more convincingly which way they're going to move away from these key levels that they recently broke down from. Jury's still kind of out there on both cases. Now, if we get into some sector analysis, we'll go to top performing and worst performing of the week. Top performing was Staples, and thanks mostly to all Friday's action here, 1.22% rally for Staples. You can see this uptrend very much continuing now. It was pulling back over the past couple of weeks, kind of double bottomed here around this 56 area, not officially a double bottom, but just finding buyers step in at the same spot around $56. Launched higher here on Friday, looks pretty good overall, acting as a nice kind of rotational safety haven there as well. XLE trying to put in that bottom. Remember, this had this high volume breakdown a couple of weeks ago from this trend that it was rallying in for most of this year. It is trying to stabilize here. Volumes have picked up recently. Still kind of in a tough spot. Maybe gets a kind of a bounce back up to the $66, $67 area, and how it acts up there I think is going to be very important. Not too interesting to me one way or the other. And finally, utilities on the top three rallied or found support and undercut briefly right around this 57 area, popped itself back up. Strong day here on Friday, did it on heavy volume. Like this as potential support. Nice support being demonstrated again is 57, so you get a clean way to kind of shoot against this. Gonna be looking at this myself, but utilities getting a nice kind of bid here on Friday. For worst performing here, we got semiconductors. Remember, semiconductors started to break down a little bit last week. The real breakdown, I guess, was Monday's trading of this week, but we started to get a little bit of pullback off of these highs in last week's trading. We broke this trend line, and MACD did turn negative here. It's had an incredible run to the upside here, but it did lose these all-time highs it recently made. It broke trend, and now it's really just waiting to see if the buyers can step back up here, put in some type of higher low. You can see volume really picked up here. You can see kind of a double bottom in the very short term Thursday, Friday. We'll see if that can stick. We'll see if it can get follow through. But really, for me, I'd be looking for more price structure there to before I'm comfortable jumping in. XLK, kind of the same thing. Got a high volume breakdown as well. It's stuck in this short term downtrend. Again, very strong run throughout the course of this year. This is a very reasonable looking pullback at this point, and we're still waiting to see where the if the buyers can really start to firm up below that $75 level. XLI, this was a position we had on here over the past couple of weeks. We got stopped out this week. It did start to stabilize here towards Friday here, but it is on the underperforming, third worst performing from a relative basis on terms of sectors. It lost the $77 breakout level. It fell back down and undercut the lows here from early to mid-April. It is trying to stabilize here, but for me, I'd really just like to see this back above $77.35 to really get excited about it. Otherwise, we're kind of just looking for this bounce and just waiting for the reaction if it can get back up to that $77 area. So that is it. That is the recap for this week. It was a busy week out there, lots of cross currents. Know your time frame, protect yourself. Risk happens fast, and we'll see if we can get follow through. We'll see how the markets follow up this type of of the highest volume week that we've seen all year. The coast may not be clear yet, so just understand that. We could still be in some at least turbulent waters or sideways choppy waters. We don't have to go straight up or straight down every single week. So that is it. Thanks so much for tuning in and watching. Have a great weekend. And don't forget, if you like the videos, do subscribe on YouTube or follow us on the Trade Risk, traderisk.com/blog. We'll see you next week.